You're watching Stock Watch. I'm Zinati Guma, and joining me to unpack your stock-related questions today are Jean Pierre Verster from Protea Capital Management and Mark from Oystercatcher Investments. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. Mark, what happened to the Rand today? We were doing so well, and we're actually still doing well on the equity space, but the currency just dipping, and now, last time I checked, it was above 19 Rand against the US dollar.
Yeah, I mean, just moving around a bit. We saw it strengthen yesterday below 19, now sort of back in line with 19 to the dollar. South Africa is seen as a liquid currency market, or it is a liquid currency market, and people are able to take a view on emerging markets through trading the Rand. And so our Rand does move around quite a bit. I mean, I don't think there's anything drastic that I saw coming out which would indicate any real direction to the Rand. I think 19 to the dollar is probably where we are for the moment. I mean, we do have a good, solid terms of trade at the moment, so we're exporting more than we're importing, so that should provide some support for the Rand. But yeah, longer term, it depends on our interest rates, on our GDP growth. And yeah, I think 19 to the dollar is probably fair for the moment.
JP, any thoughts on that? I mean, there's just been so many factors that have been affecting our local currency. What are we looking at this point?
Well, Zinati, it's interesting that you comment and reference the Rand against the dollar. So for me, what is more interesting is what's happening between the dollar and other developed market currencies. So, for instance, if you look at the Rand against the euro and the pound, it has weakened quite a bit more versus against the dollar. Or to put it another way, the dollar has weakened significantly against the euro and the pound. So the big thing about the tariffs, one of the big consequences, is that a lot of international investors are losing faith in the US dollar. And that means that a lot of investors have decided to diversify away from the US dollar and are looking for other currencies. And I mean, the US dollar is still the world's reserve currency, so it's very difficult to find another currency that can be as good a store of wealth. But so far, the likes of the euro and the pound have benefited. The Rand initially weakened against all of them, but now that the dust has settled, we can see that the Rand has weakened more against the euro and the pound versus against the US dollar.
Ooh. My dreams of a European summer are not looking so good. All right. Well, while we're on that, there's a question on a US recession. But actually, I mean, just before we get to that specific question, Mark, are talks of a US recession still on the table, even though we've had this temporary freeze on the new tariffs?
Yes, I think so. I mean, the odds of a recession have gone up quite a bit. I think the real issue that business is having at the moment is that you can't really plan anything. You've got to put all your plans on hold. You have to hold back your buying plans. You have to hold back on your expansion plans, your capex plans, because you don't know where the tariffs are going to settle. At the moment, I expect that there's quite a bit of people sitting on their hands, even consumers consuming less. The outlook is uncertain. Markets don't like an uncertain outlook. And the economy, I'm sure, will have already started to slow. And we'll start seeing that data will start to come out in the coming months. So I think that there is a risk of recession. It depends a lot. Depends on kind of how quickly that they can get to a more certain outlook on the tariffs. What's going to be exempt, what's not going to be exempt. And, I mean, we also need a bit of a de-escalation between the US and China. Whether that happens or not, I'm not sure. I mean, we saw the headline today that China's now stopped buying or stopped all purchases of Boeing aircraft out of the US. So really need a de-escalation in the reset of tariff and global trade.
Yeah. Well,
and then I think we'll start to see more confidence return.
Okay. Well, the question specifically asks, if the US experiences a recession, what will happen to SA and China? JP, do we all just go down with it?
Well, normally, as the saying goes, when the US sneezes, the rest of the world catches a cold, which just refers to the fact that the US is still the largest economy in the world and it drives specifically consumption. Now, the relative sizes of the US versus China has shifted the last few years. That's part of what's going on with this whole tariff war, because China is rising and the US relative position in the world is slightly lower than what it was in previous years. So it might be that if the US enters recession, maybe this time is different. Who knows? But that would mean that companies would need to be more exposed to China, and China would need to weather that recession well versus past cycles. Now, China is still very much reliant and linked to the US economy. They have not stimulated their local economy sufficiently enough to create sufficient demand and consumption from the Chinese consumer if the US consumer goes through a soft patch. So I would still think the rest of the world will probably, for this cycle, if we do see a recession, also go through something similar. But maybe the next time around, if China can create a consumer class with 3 to 4 times the population of the US, who knows? Maybe the next time they can decouple and they can escape a recession if the US does go through another one somewhere in the near future.
And we will be getting more information on the state of the Chinese economy tomorrow with the first quarter GDP print. So the viewer says somehow anticipating a plunge in stock market prices with Trump's tariffs, I cashed in my US stock profits. Now, do I look at reinvesting in the US and the EU, or do I look further at Asian markets or even the SA Inc. on the JSE? Very interesting one there. Mark?
Yes, well, I mean, I guess the first thing to say is that you should hold a diversified portfolio of assets. I mean, our business really looks at the South African market a lot more closely than the rest of the world. We bottom-up stock pickers, so I mean, we do like some opportunities here in South Africa. I think that I don't think our market's particularly expensive. It's only held up because of our weighting of the index weighting to the gold shares. So there are a couple of companies within the index that have sold off, which are looking more attractive. So yeah, I would look to diversify, buy your favorite stocks, or you could also buy an ETF on the index as a whole, and then buy a bit of South Africa, a bit of Europe. I think Europe is looking interesting because of the additional stimulus that's coming. Germany wants to spend more on defense, and also to help their domestic economy. They're looking at increasing the debt to GDP ratio, which was being set at 60%, which could go up to 80%, which means there's potentially a lot of stimulus coming in Europe. Interest rates also coming down in Europe. So I think it is quite an interesting idea at the moment.
Well, JP, if you got scared and cashed out of the USA, should you be looking at going back in?
Well, I hope that no one would get scared of, say, all US stocks when these macroeconomic rumbles happen. The same with Europe or China. You just look at what defense stocks have done in Europe. Even though you might not have a very positive view about European economic growth, there are still individual stocks that look very interesting. And similarly in other jurisdictions. So don't let these macroeconomic and political events, even though they might be seismic events, that might really change things significantly. That doesn't mean that every single company listed on a stock exchange in that country is going to be negatively impacted. And unless you're an index investor, and even then you should actually look what's in your index, it's all about the specific companies you're investing in, their competitive advantages, their management teams. And I promise you, they're going to come up with ideas and plans for these tariffs, like Tim Cook did. You know, he phoned up the Trump administration, and over the weekend he got a exemption for Apple iPhones. So all of a sudden, you don't have these large tariffs there. So management teams make a plan, and we're investing in companies and management teams. So don't get too frightened, and still invest in the US, and still invest in Europe, and still invest in China. but base it on the individual companies, not on the macroeconomics and political situation.
Tim Cook cooked and made a plan. Let's go into the JSE again. The viewer is saying, why is FirstRand not mentioned by analysts? The good feedback is always centered around Absa, Capitec, Nedbank, Standard Bank. I mean, in your guys' defense, you always say that there's value in the whole banking sector. But is there a reason why maybe there would be more value found in the other ones than FirstRand, if that is the case, Mark?
Yes, there's a specific reason at the moment. So FirstRand has an investment in the UK, their Aldermore business, which is quite a large portion of their balance sheet. So it's about 20% of the balance sheet is invested or is in the business in the UK. And the UK are busy with an investigation into the commissions on finance given to second-hand motor vehicles. So this has started last year. FirstRand's already raised a provision for it. Then there was a further development whereby a judge found that the commission was actually closer to a bribe in common law, and so that now case went to the Supreme Court. So we're waiting for that ruling. I mean, I think generally we're expecting that the court will rule that paying commission is not paying a bribe. But further to that, there's also a Financial Conduct Authority investigation, and they will then, post the court case, announce what the redress will be for consumers. So this court case and this consumer redress is hanging over FirstRand because we don't know how to quantify the liability. They have a provision, but it's likely that they might have to increase that provision. And it's just the uncertainty. FirstRand's a great business. We have no doubt that they will come through this with flying colors, but just can't value that potential liability at the moment. And I think that's why analysts are staying away from the name for the moment.
We're talking about the banks, and before FirstRand, this one is specifically for Absa. If the share price is undervalued, and can the stock rise to over 215 Rand? It is now at around 171 Rand. The viewer says, I think this is a fair value for this stock. Absa, JP?
Well, yes. So Absa, structurally, together with Nedbank, has got a lower return on equity. So that justifies a lower PE, but more importantly, a lower price to book ratio. So much so that Absa is trading below its tangible price to book. So if you think the fair value is higher, that means you would want to see the ROE improve, and that would justify a higher price to book. And that could then, if the market agrees with you and sees that rise in the ROE as being sustainable, that could see the share price trade above 200 Rand. In the case of Absa, that probably means they need to grow their non-interest revenue stronger than their net interest income, which is more balance sheet intensive, so it structurally has a lower ROE. And to do that, they need to be more, not necessarily in lending, but more advisory and making fee income and trading gains. So Absa's got some work to do to increase those parts of its business, which will shift the balance between the NIR and the NII, which will raise the ROE closer to their targets, which will justify a higher price to book, and which will boost the share price. So that is what they need to do. And we wait to see if Kenny Finla can deliver that. He certainly seems to be a man for the job, coming from Standard Bank, which has got a higher ROE. And now we need to wait and see if Absa can deliver.
Okay, a very clear roadmap there. Well, let's get into other financial services groups. Let's start off with Discovery. Mark, I'll give you Discovery, and JP, I'll give you Old Mutual. Are they a good buy, Discovery? Discovery has actually had quite a lot of optimism around it lately, Mark.
Yeah, so Discovery is starting to look more interesting to us. I think Discovery for a long time traded under the cloud of NHI and a lot of uncertainty around their health administration business. That's now looking like health administration will continue, and they earn a lot of cash from that business, which they've been reinvesting in their growth opportunities. I mean, they've got investments in life. They've got their JV business in China. They've got Vitality, which they're busy rolling out to different Vitality partners around the world. So there's still a lot of growth and runway within the business. There's also been a bit of question around the life, South African life business, whether it actually makes any cash or not. They've been quite aggressive in how they've priced that business. But that's becoming a smaller part of the overall business of Discovery as the other ventures start to grow. So I think that they've also got their bank, which is starting to grow, is starting to reach profitability. So yeah, a lot of interesting things happening in Discovery, and the share price has corrected, and now I think it's looking quite interesting. We don't have a holding, but we are looking at it quite closely.
All right. JP, what about Old Mutual? Old Mutual is quite an interesting one because you get some analysts that say it's too complicated. They can't really piece through their results sometimes. What's your take on Old Mutual?
Well, all the life insurance companies the last 18 months or so have been really tricky, really complicated to go through their financials, because there was a change in the accounting standard pertaining to insurance contracts. What was it? IFRS 17. So that means all of a sudden, all the insurance companies' reporting looked quite different. And a lot of them had significant opening balance adjustments. And the income statement looks still not something that a lot of analysts are used to. So when it comes to Old Mutual, again, their returns are slightly lower than some of their competitors. They've been spending more capital to also build a bank. That's what a lot of life insurers want to do. And their CEO has now also resigned. So we need to wait to see what the new leadership will look like. Who will be the new person taking over from Ian Williamson? So there's a lot of uncertainty when it comes to Old Mutual. If you think about the main parts of their business being the mass foundation cluster, call it lower income funeral plan business, and the more affluent savings type and investment products business. Those markets have also been saturated, big competition in the funeral space from Capitec, and not a lot of value creation from the more affluent market. So of all the life insurers, I think Old Mutual has got the weakest competitive position. And that's why they probably need the bank to work, and we need to see what vision the new management team will have, the new CEO will have, and then we can reconsider. So it is cheap, but it's cheap for a reason until we get clarity on the long-term strategy and some targets that Old Mutual might announce to the market.
All right. I have got a lot of questions on this one. I think just things that the viewer wants to be cleared out. This is for ARK Invest, African Rainbow Capital. We are aware as to the offer of R9.75 made to minorities. In this regard, were it to be agreed or approved, what is the date that this offer will be finalized? I don't know, Mark, if you have those details on hand. And should the minorities not agree to the R9.75, do us minorities just go along as usual? And what percentage of the total shares are required to vote in favor for the offer to be accepted? And lastly, if this offer is at R9.75, why has the share often traded well under R9? Lots to digest there. Can you simplify that for us?
Yeah, so there is an offer to take the company and delist it. I'm not sure when the vote is. It'll be in one of the SENS, but it'll be fairly soon, I think. So the shareholders will vote. If more than 90% of the shareholders agree, then minorities have to follow along, and you get the price that's agreed. I think it's R9.75. And and then you will receive the money, and your share will be delisted. As to why it trades at a discount, is there is an opportunity cost, and there's also the uncertainty as to whether the vote goes through or not. And so that's being priced into the current share price. The whole opportunity cost of holding it until the vote is held and the share is finally delisted, and then also the uncertainty as to whether it goes through or not.
All right.
Okay,
thank you for clearing that up for us, Mark. Really appreciate it. JP, this one's for you. Berkshire or Markel Group, or both, for Main Street US exposure?
Yeah, so they're both part insurance businesses, part investment businesses, where they take the money generated by the short-term insurance part of the group and then reinvest it into both listed and unlisted companies in shares and other investment assets. Now, if I focus on the insurance business, the Berkshire Hathaway insurance businesses have got a much better track record. What you want to see is an insurance business that has a combined ratio below 100%. That means it's an insurance business that on a consistent basis makes an underwriting profit. They take in more premiums than what they pay out in claims. And Berkshire Hathaway has that. It's got very strong insurance businesses. Markel, not so much. Their combined ratio is consistently above 100%. So if your starting point is that the insurance business of Berkshire is much better than the insurance business of Markel, and you have an investment manager at Berkshire Hathaway in Warren Buffett that might be 90 odd years old, but I think he's 95 now. I think he was born 1930. In any case,
Yeah.
you have an asset manager that's probably better in Warren Buffett than you have in Tom Gaynor, the CEO of Markel. So
Okay.
if the insurance business is better and the investment decisions are better, I say stick with Berkshire Hathaway.
He's been through all the cycles. All right. I think before
All of them.
all of them, yeah. Before we get to the stock picks quickly, will City Lodge ever come back to the R4.50 levels over time? I actually saw that there was an asset manager, I think it's called Perisec Brokers, that increased their stake in City Lodge. I saw a sense out today. But Mark, City Lodge has not done well at all recently, well, in a long time actually. Do you think that it could see the R4.50 level at any point?
Yes, I think it will go back above R4.50. Just don't know what the time frame is for that. City Lodge is a business hotel group, so they benefit a lot from business travel, which took a hit during COVID and then subsequently came back, but maybe not to the same extent as before. I mean, these businesses have large fixed cost bases, so they need to keep occupancy levels high. If you don't sell your hotel room tonight, you never get the opportunity to sell this hotel room tonight again. You know, the opportunity's gone. You've got to keep the occupancy level up. You've got to keep it above 60%. And if you can get it higher than that, you start making really good money. So I think if business travel picks up in South Africa, if GDP is a bit stronger, which was our base case at the start of the year, now it's looking a little bit more murky with all the tariff wars, then yeah, City Lodge will do well. And in time, I'm sure that their share price will be above 450 again.
All right. Well, let us get to your stock picks for today. JP, what are you choosing?
I'm choosing a US stock, notwithstanding everything that's happening. One that you might have heard about before. Alphabet. Obviously, the main business is Google, which is so well known, it's even become a verb. And notwithstanding what is going on in the tariff wars and people thinking, oh my goodness, is the rest of the world maybe going to retaliate, not with tariffs on goods, but maybe some type of tax on services? And Google is the one major international business that's relatively easy to target because so many other countries have got businesses that make payments to Google for their advertising platform. So there's been some concerns with that. And there's also been some concerns regarding large language models and people using the likes of ChatGPT effectively for searching as well, rather than the Google browser or web browser. And Google has responded to that by creating Gemini. So they're also in the LLM market. And Gemini is very good to act as a plug-in into other type of applications. And then they still have Android, which is a great mobile phone operating system, which is also dominant. So I think they've got enough arrows in their quiver to deal with all these ructions we are seeing. And the share price has come down from roughly $200 to around $150. It's not expensive relative to the rest of the Magnificent Seven. High quality company with a wide moat, and therefore Alphabet is my stock pick tonight.
All right. Mark, what are you hanging your hat on?
Yes, I'm picking a similar company, but on the other side of the world. So I'm picking Prosus for their main investment into Tencent. I think that Tencent will continue to do well. Maybe its earnings are a little bit impacted in the shorter term. I mean, we thought that their earnings would grow 20% a year for the next few years. Maybe it's a little bit slower, but the Chinese government will also look to stimulate. And as we know, the Chinese government is trying to swing their economy away from an export-led economy to a more consumer-driven economy, and that's beneficial for Tencent in particular. So I think that, you get Prosus, you get your investment in Tencent, you get Prosus trading at a discount to its assets, so you're not paying too much for your investment. And I think that if China stimulates, I think that Tencent will go up, and so will Prosus.
All right. Well, thank you so much for your time and for your analysis today, gents. Much appreciated. That is all for tonight's Stock Watch. Thanks to our guests, Jean Pierre Verster from Protea Capital Management and Mark du Toit from Oystercatcher Investments. Up next, The Close. Stay watching.